You're watching Asia Fest, and let's get your check on the Greater China markets. This morning, a mixed picture there, with Shanghai Composite down 0.1%, Shenzhen Component about flat this hour, while we're seeing the Hang Seng push higher by more than 1%. We start to zoom in on shares of Chinese battery giant CATL. It is lower by about 1%. That's after it started the process to list in Hong Kong. The deal is reportedly expected to raise at least $5 billion, and it could be the city's biggest stock offering in 4 years. Of course, we will continue to track that for you. And to help us look at this more closely, we have Francis Tan. He's Chief Strategist at Asia Indosuez Wealth Management. So, Francis, thanks for joining us. So I wanted to zoom in on really steelmakers in Asia. They continue to, of course, kind of feel the impact of Donald Trump's 25% tariffs on steel and aluminium. And they're trading kind of mixed today, a bit more on the downside. How much further downside do you think there will be for these Asian steelmakers in the medium term?
Of course, it's hard to estimate the further downside. But right now, what's on the minds of the commodities players right now is that if the Canadian and the other countries who are impacted by the steel tariff, these countries will constantly have to look for the other countries that they can export their steel towards. But if that's the case, we are going to see a lot more potential supply in the rest of the world, and that will naturally impact some of the Asian steelmakers as well. So right now, I believe that, tariff is a tax on everybody, right? So there will be no much producer surplus to go ahead as well. So that, I think, may impact further our Asian steelmakers going forward.
Yeah, and I don't know if you have an estimate for this, but you know how the hit to Asian steelmakers could kind of weigh on Asia's economic growth?
Well, it really depends. So of course, some of the Asian economies with a larger portion of commodities or steel as a percentage of GDP, they can be hit. I mean, in one case, we see China as one of them, more significant steelmaking, Korea as well, South Korea. But that said, it is not the big part of the entire economy, right? While steel is a big part of China, but it's never the largest part. So I would say that the more important thing will be on the tariff on general goods, let's say, coming up from China, rather than the steel sector alone.
And that's, of course, contributed to some of the jitters in the market. We're seeing kind of mixed, or rather, mixed picture right here in Asia. And adding to that mixed sentiment is comments that we heard from Jerome Powell, the U.S. Federal Reserve Chair, where he said that the Fed is in no rush to cut interest rates. So what sort of trickle-down effect do you think that could have on central banks here?
Right. I would say that at the start of January this year, markets have already been anticipating a least dovish Fed in 2025. So with what Jerome Powell said as well, I think that is pretty much aligned with what the interest rate futures market has been pricing in for the interest rates for this 2025 this year. Over in Indosuez, we continue to believe that there should still be around 2 rate cuts this year. Of course, we have revised it from a 4 rate cuts mark, right? So even us, we were also getting a little bit less dovish. But the key thing to note is that the Fed will still be on the path of rate cut and not rate hikes, nor a prolonged terminal from here. So that means that eventually we are still seeing signs of slowing down in the US economy, particularly also in part driven by the tariff that Trump is going to enact. Because if the tariff is going to be a lot more haywire, it's going to be a lot more tougher, we may see eventually a lot more inflationary push into the entire US economy. So with growth slowing and a little bit more inflation coming up, it could be a stagflationary situation for the US economy.
Right, and you don't think that the Fed would be inclined to raise rates, even though those tariffs are seen as inflationary?
So right now is really too many levers to pull. It's hard to see. But on one end, I'm looking more closely at the labor market. Now, the common market thinking is that inflation will drive pass-through to CPI 1-to-1. I don't think so. For instance, if the tariffs are going to be 10% from every part of the world, it's not going to translate into a 10% increase in CPI, because in America, services matter a lot more than goods. So services are not tariff in this case, and around 63% of the CPI basket in America is services. So I looked at labor costs a lot more closely when estimating CPI, which is coming out tonight in the US anyway. And that part, I would say that the labor market is loosening, is getting looser and not getting tighter. So wage growth will also be continuing this year at a slower pace.
All right. I'm going to turn your attention to Asia, your outlook for Asia, especially in terms amid those tariff, the uncertainty from the tariffs and the retaliatory tariffs, that these countries want to slap back on the U.S. How are you viewing equities here?
Well, equities right now, the only certainty is the uncertainty for equities investors. It really depends. There are a group of investors out there that are thriving on the certainty of such uncertainty. One day, Trump says there's going to be tariff coming against these countries. The next day, oh, so sorry, I'm giving them 30-day grace, right? So this volatility is causing some trading opportunities for some investors or some traders. However, I think that for the common investors out there who are longer-term investing in this market, do not be too flustered by this up and down in terms of the news flow. At the end of the day, investment is about accumulating our wealth. And I would say that the longer-term strategy, the dollar cost averaging strategy, is still important. Right now, we are still quite positive on equities, particularly in the US. At the current juncture, in terms of the valuations, very much pushed by technology, do try to lighten up a little bit there. I do see broadening out effects of the leadership of tech from 2024 into 2025. So look at the other sectors that can be more, I would say, protected against tariff coming in. So domestic services, things like that will be okay.
Right. And finally, you say you're positive on equities. How you feel about commodities and gold is doing pretty well, and more upside, you think?
Well, so for commodities, it's two ends. One, precious metals, right? The other one is the normal industrial use ones, which can be slowing down a little bit because of competitive and tariff measures. Gold, I would say that like I mentioned just now, the only certainty now is the uncertainty. So gold prices will have to edge higher. On a shorter term technical basis, gold seems to be breaking up the 3,000 mark.
All right. Many thanks for that. Gold's the way to go. Francis Tan, he is Chief Strategist Asia, Indosuez Wealth Management.